All right, good morning, everyone. So Kai mentioned how much he likes near-term producers. I've got a story for him. So we're not 7 years away from production. We're a lithium developer that's based in Brazil, and we fully intend on producing by the middle of next year. So we're a very, very near-term developer, and I'm excited to tell you more. So like I mentioned, we are a TSXV-listed topco called Lithium Ionic, and our assets are in the state of Minas Gerais in Brazil. My name is Jim McKay, and I'm the manager of corporate development. So before I dive into it, I'll direct your attention to some forward-looking statements and the cautionary notes surrounding them. To give you a high-level overview of the company, as I mentioned, we're in Minas Gerais. Many of you in this room are probably familiar with Minas Gerais, given that it's a prolific mining state in Brazil. So there's dozens of mines currently in production and across all commodities, iron, copper, and of course lithium. With a jurisdiction such as that, there's a lot of infrastructure advantages, which I can elaborate on, but we have access to clean, hydroelectric, low-cost power. We have paved roads to our ports, off which we can ship our concentrate. There's decently sized towns with more than 30,000 people that all work in the mining industry. They're familiar with mining. And when you have the proximity to towns like that, you also reap the secondary benefits of having access to suppliers and contractors and services such as that. So multiple things that go towards making a low-cost operation. I'll spend most of our time talking about the feasibility study that we just put out in September on our flagship asset. So there's a nice shot of Brazil's Lithium Valley. Our flagship asset is called Bandeira, and it's a 48 million ton resource. Like I said, the DFS came out in September. Of that 48 million tons, 23 million tons made it into the mine plan as reserve. You can see a lot of other companies in the region. So Sigma is a very well-known story in the lithium space. So 4 years ago, Sigma stood on a stage like this with a $100 million market cap. They had a resource, they had a plan, they executed upon it, and of course they benefited from the tailwind of lithium price at the time, and they went from $100 million to over $5 billion in the course of about 2 years. So here we are with our resource, with our DFS, and with the plan to execute, and that's what we intend on doing in the next year and a half here. There's a little shot of the infrastructure I mentioned, the power, the ports, the roads, and of course the towns that are full of people. There's another company by the name of CBL, which shares a fence line with us. They're mining the same underground mining method that we're proposing, as well as the same surface processing, DMS processing. They've been mining there for 30 years, quite successfully. So they're a privately owned Brazilian corporation. They've been mining since the 90s, so the proof of concept couldn't be stronger. There's very little technical risk. There's very little geological risk because we know we share the same ore body. We've been underground there. The employees that work there, we have employees that have worked there. We know exactly how things work over there. So like I said, it's a great vote of confidence. Little highlight of our resource. So the majority is at Bandeira, 48 million tons of our global 70 million tons, and our secondary asset has about 20 million tons. So the leadership team at LTH, the company was founded by Blake and Helio. So Blake is a geologist by background. He's based in Toronto, and Helio is our president. He is based in Belo Horizonte. They founded the company in 2022, and it's been extremely productive since then in terms of delineating these 70 million tons of resource. Mike Westendorf is our COO. He's very much a mine builder. So he spent over a decade at Copper Mountain Mine in BC here, and he saw that through design, construction, commissioning, and ramp up, all the way through to the sale to Hud Bay. And since then, we've been lucky enough to have him join Lithium Ionic to help us execute upon this plan and build the mine. Another important aspect of our owners team, in April, we press released that this group called Artec was joining our owners team. So what Artec is it's a boutique consultancy of lithium professionals founded by these three gentlemen here. So Brian Talbot, he is the former COO of Sigma Lithium. So he was there through construction and commissioning. Nick Rowley, another founder of Artec, he's got over a decade of experience working for Galaxy Lithium, and he's spent his whole career in concentrate marketing. So his connections are unparalleled when it comes, or in terms of downstream off-takers, and he's been helping us navigate that the off-take environment. And then Rodrigo Rosso, he's a lawyer based in Sao Paulo. He's also been instrumental in helping us navigate the intricacies of Brazil. And then below these three guys, there's about 20 people on the payroll at Artec, from procurement professionals to project managers and engineers and process people. And they really, the result of the 10 months of hard work since we've had them on the team has been our recent DFS. So my next slide, I can share some highlights of the DFS that came out in September. So we're currently positioned to produce 180,000 tons of spodumene concentrate annually over the course of a 19-year mine life, and that's that 23 million tons of reserve that I mentioned previously. One of the most important things is our low OPEX. So we're well within the first quartile of global spodumene producers. So despite being an underground hard rock spodumene mine, we have a first quartile OPEX. And the number that should be jumping off the page is that CapEx. So $191 million of CapEx, relatively low. It's not too big of a pill to swallow. And because that CapEx to NPV ratio is so high, you see an extremely attractive IRR there. The natural first question is, what's the price deck that forms the basis of this DFS? We contracted Fast Markets, who of course is one of the leading, forecasters on the planet in terms of supply and demand of spodumene concentrate and where lithium's going, where it's being consumed, where it's being produced. So we used a Fast Markets forecast that used a long-term price of $2,300 per ton. So the spot price on Friday was $2,500 per ton. So the environment we're currently in today already outdates the price deck that we've used in our tech report here. And that tech report had quite lower prices in the near term. So it was as low as $1,300 a ton. So like I said, we're well over $1,000 above the first years of production's price that we illustrate in this tech report. For reference, with this $2,500 spot price, Bandera cash flows more than $100 million per year at today's prices. So if you stack that up next to your $191 million CapEx, it's a pretty attractive economic case. And you see, even with this price deck, it's a 26-month payback, which is very attractive. So we had a previous FS that came out in May. We upgraded the resource earlier in 2025, and then the final DFS came out in September. That's the tech report that we'll be executing upon, and that's the basis of the mine that we're going to build. It's got that attractive CapEx of 191. And the first quartile OPEX that sets us up to make money even when the price of lithium falls, as it will again, because it's such a volatile commodity. Here's an indication of the Fast Markets price deck that we used in the tech report. Most people are familiar with what happened in 2022, 2021 when the price took off. It got as high as $6,000 a ton of spodumene. So that's a little frothy. Of course, when that happens to a commodity price, everyone comes out of the woodwork with a lithium project all of a sudden, and some projects that shouldn't necessarily pass FID, they pass FID and they start getting constructed, and you get these high-cost producers come into production. Supply increases, price falls, and those high-cost producers can no longer make money. You see them getting shuttered. What we intend to be is a low-cost, quality producer that can make money even in the downturns of the cycle. So like I said, as nice as $2,500 spodumene is today, we're prepared for when it dips back down to prices as low as $1,000 or far below that. And that $191 million of CapEx, I've highlighted the lack of geological risk because of our neighbor. We're mining the same ore body that they've been mining for 30 years, so there's low risk there. There's low technical risk in the sense that we're going to be using the same sublevel stoping method that they use, the same surface DMS processing that they use, so we have a great indication of what the recoveries will be, what the actual costs will be, and I think this project has relatively low capital risk. This industry's been plagued by a lot of CapEx blowouts over the previous years. If you have $1 billion CapEx and you have a 20% blowout, that's a lot of money. But if you're at 191 like we are, and that already includes $20 million of contingency, we're well set to make sure that we come in under that number. And here's a breakdown of our operating costs. So again, for reference, spot price today is $2,500 a ton. We can get a ton of concentrate to our mine gate for under $400 a ton. All-in sustaining cost to include the cost of royalties and transportation and everything like that. Depending on the price deck you use, we land somewhere between $600 and $700. So again, Our ASIC is between $600 and $700 compared to today's spot price of $2,500. Another shot of the economics, but as I am running out of time here, I would encourage anyone to stop by booth 504, where myself and Mike, our COO, are stationed over there. We'd be happy to elaborate on any of this and share the story with you guys further. Again, the main takeaway is that we intend to be producing by the middle of next year. That's what our plan, that's what our timeline has set us up to do. And we're a very, very near-term producer, and I believe we'll be the next producing lithium mine in the world. Thank you.